Hi, Scott Senner here with Interlinc Mortgage Cabin Financing, and today we're going to be talking about assets, what is required in the way of assets for a cabin application, and what kind of income we can use for loan qualifying based on the assets that somebody has. So to make this a little bit easier, I'm going to use a couple of examples. So let's say that a borrower is 45 years old and has $500,000 in stocks and bonds with an Ameritrade account, and that account generates, say, $15,000 a year in interest income. In addition to that borrower's salary or commissions or however their primary pay is derived, we're able to use that $15,000 a year that they derive in interest or dividend income for loan qualifying as well. The $500,000 balance is relevant in the sense of we can use that as what's called reserve funds, meaning when underwriting reviews that file, they'll want to see that the borrower has money in the bank that's in what we call reserves, meaning after someone's down payment and closing costs, they still have money left over. They're not tapping themselves out when they're buying, a cabin. Now, if someone, for example, is 62 years old, whether they're retired or not, they have the added benefit that goes like this. So say that someone's 62 and they've got $1.5 million in retirement funds and IRAs and various investments. Now we're able to take that balance, divide that amount by 240, and that resulting amount we can add towards any other pay that they may have, such as Social Security, pension income, etc. So let's say that 65-year-old has $3,000 a month in Social Security and $5,000 a month in a pension, and let's say they've got $1 million in a retirement account. We're able to take that $1 million, divide it by 240, which comes to 4166. So that 4166 plus their pension plus their Social Security is now the amount that we're able to use for loan qualifying for a cabin. So I'm trying real hard not to complicate this, but basically, if someone is 62 or older, we're able to take the amount of money they have in assets, retirement, stocks, bonds, whatever, divide that by 240 to come up with a number that we can use for loan qualifying, which is a really handy feature to have available when someone's retired and doesn't have their normal salary anymore. If someone's not 62 or does not have a retirement account they can draw from without penalty, we're only able to use the interest or dividend income from those assets for loan qualifying. As always, if you have any questions about this, don't hesitate to reach out. I'm more than happy to answer any questions you have. And I hope this video wasn't too confusing. And we'll talk soon. Thanks. Bye.